Good afternoon, everybody. Today I'm joined with Morgan Good from Carlyle Commodities Corp. This morning, Carlyle announced a gold intersect of 613.9 meters over 0.55 grams per ton gold equivalent at their Newton project in BC. I thought it'd be fantastic to have Morgan on here to chat about the result. All right, everybody, enjoy the interview. Morgan, thanks so much for joining us today.
Thanks for having me, Steve.
So you guys just announced a pretty big drill hole today. What can you tell us?
Well, this was the third of 3 holes from our first phase program. Obviously, everybody would have seen what we put out about a month ago with nearly 700 meters of half a gram gold, which is an exceptional hole, for British Columbia in this day and age. And, to repeat that and even have a slightly better grade, we just did about 613 meters of 0.55 grams per ton gold equivalent, with a couple of fairly high grade intercepts within that as well. 1.67 grams per ton gold equivalent over about 18 meters, as well as 1.45 grams per ton gold over approximately 33 meters. And that 18 meter section was somewhat close to surface, which is really, really interesting because we've been sort of hunting for some more high grade potential at surface. Obviously, finding some sort of potential starter pit in a future situation closer to surface is something that we have always wanted to find. And I think, we may have found some more clues that could lead us to a pretty exciting phase 2 program later this spring.
Okay, so investors are looking at this. It's probably a lot different than some of the other drill holes that they've seen. We've got these very large intersections of lower grade gold. Now, I know that you guys haven't put out a PEA yet, so we can't get into at what value it becomes economical. But maybe we can talk a little bit about similar projects, maybe nearby, or other projects that you've seen that sort of have that sort of lower grade, really large deposit type geology, and sort of what the economics are kind of required in terms of gold prices in order for it to become favorable economics.
Yeah, absolutely. Well, I think, you said it right there. These large tonnage, lower grade situations are quite common in this part of British Columbia in particular. Obviously, the Newton is one of these situations, but if our best comparable would be Artemis's Blackwater, which, as everybody knows, is going into production right now. They're expecting to pour their first ounce of gold sometime in mid 2024. They've got about 12 million ounces at a very similar grade. With $2,000 US gold, it's more than economical, particularly in Canada. There's other projects like the Bruce Jack as well, which is close by to the Newton. And so this geological belt we've got is notable for its lower grade, large tonnage situations. And I think, to rewind the clock, even about 10 or 11 years, you would have found the Blackwater similar to where Newton was today, sort of the 1 million ounce range and growing. And I think that if we can, prove up to sort of that 3, 4, 5 million ounce range over the next couple of years through what we expect to be a macro bull cycle, we could put ourselves into a really interesting situation, such as Blackwater was in just a little while ago.
So we've talked a couple times before, and the thing that I found really interesting about this project is, now I'm relatively new to investing in mining. I'm a few years in. I've already got a few scars to prove it. But one of the things that I've learned at this point is that projects that have lots of historic drilling is often where you're going to find your best value. Let's talk a little bit about the historic work that's been done on the Newton project.
Yeah, I think that's what attracted Carlyle to looking at this acquisition a couple of years ago at sort of the in a weaker gold space, was the fact that it had almost 35,000 meters of historic drilling. More than $25 million had been spent, and primarily all of that was focused on developing the current resource that's there. You can't just pick that up off the street. This is 5-6 years of solid work through the last sort of bull gold cycle. The previous owner, Hunter Dickinson Company, had worked for nearly 5 straight years. And as we all know, it's a workable project 12 months of the year. So they had worked 50 to 60 months straight on this thing to really get it to where it was. And then, of course, gold fell out of bed, which became the opportunity for Carlyle in sort of late 2020, which then, of course, brings us to today. So we were able to acquire a lot of value at a very cheap valuation, which I think provides huge blue sky for the company and shareholders.
what's the ownership structure that you guys have with Newton?
We own 100% of the project.
100%. Is there a royalty on it?
Yeah, there's a 2% royalty to AMark, which is the property, the company, the pubco that actually sold us the property, and then there's a 2% royalty to original stakeholders that actually sold the property to AMark some time ago, to older gentlemen. But other than that, Carlyle has no option payments. It was paid for free and clear. No cash payments, no share issuances and whatnot.
I know you'll probably get tired of answering these types of questions, but I got to ask you. I'm sure you're watching the price of gold every day. What are your thoughts on gold? Do you think that this $2,000 price level is really important, that we see the price of gold sort of maintain itself, sort of make a strong stand that $2,000 is the new support? I'm
quite confident that it is. I think it's going a lot higher, even in the near term, and particularly in the mid to long term. I think you're watching the de-dollarization of the US dollar being the world currency, the global currency, with what's happening in China and Russia and Saudi Arabia, OPEC, oil prices, just everything is adding up to a weaker US dollar, which tends to trade inversely to the price of gold. So I think there's going to, the safe haven, as we've all heard it for so long, as a hard asset, is only going to get stronger and stronger. And I think even at these prices, it's extremely economical, particularly in Canada, as I mentioned. So short term, mid-term, long term, I think it's a fantastic bullish outlook for the yellow metal.
Okay, so for investors watching, they are interested in Carlyle. What's the rest of the year look like in terms of timelines, sort of milestones? What should they be watching out for?
Yeah, well, obviously having this, third hole complete, we've got a really good picture of the fact that we think we've doubled the depth potentially of the current inferred mineral resource. We know there's a potential some high grade clues at surface, which is really, really interesting. So I think the phase 2 focus will be testing quite a few more holes, but not as deep necessarily, to see if we can put together a better high-grade situation at surface, particularly to the west and to the northwest. There was a lot of historic holes in the previous drilling prior to Carlyle's taking ownership that also had some interesting high-grade pockets at surface. So I think looking at sort of a potential 4,000 to 5,000 meter program, and not too far from now, we can work, as I said, all year round, and we're planning to get back up there in the next probably 45 to 60 days, give or take. So that's not too far away. Heading into late spring and early summer should be a pretty exciting phase 2 exploration season for us.
Well, Morgan, thanks so much for hopping on here, and please keep coming on here as the story continues to develop. And congratulations on the big drill hole.
Thank you. Appreciate it, Steve. Chat soon.
All right, everybody. Thank you so much for watching. If you could do me a big favor, please hit that like button, subscribe, and ring that notification bell so we can keep making more of this content for y'all.